Does H2 have what it takes to recover all the way upwards of the $15 levels once again? Or is this a ticker which is past its prime and should cut your losses from and walk away from? What's up, trading friends? Today, we're going to be discussing H2 from three different lenses. The why, the what, the where. The why is going to be a catalyst breakdown. The what, we're going to be doing some stock analysis. The where, I'm going to be telling you guys where to get in, where to get out on the chart. So, without further ado, hit the thumbs up button. Listen, 60% of you guys are not subscribed. You watch these videos on a daily basis, weekly basis, monthly basis. Hit the subscribe button. We only have one goal. Our goal is to be at 50,000 subscribers by the end of this year. I think we can do it. Call me crazy. I think we can do it. All right. So without further ado, let's get into it. Now, why do we talk about the why first? We talk about the why first specifically for stocks which have already gapped up, because we want to analyze whether or not there's any longevity to the move and whether or not the green which we're seeing is actually sustainable or is it just hype. Now, when it comes to H2, good news for you guys. This is a company which actually did have some solid news. Today, Fusion Fuel's Bright High Solutions announces non-binding term sheets for strategic partnership with a 30 million euro committee for a hydrogen infrastructure investment. So this is massive news, okay? This is massive news. Now, you got to understand is that although it's great news, right, it's not amazing, all right? It's not something that has the biggest shock value, right? Like, and what do I mean by that, right? At the end of the day, all these catalysts they need to be measured in perspective to each other, right? And I think that that's one of the things that people forget. They hear a great catalyst and they think, okay, well, yeah, that's it then. That's it. That means that the stock is amazing and that means it's going to moon. What you need to understand is that on a daily basis, stocks are fighting for your attention, okay? They are fighting for your money to put in them, right? And that's how volume works, right? That's how volume works. And these companies, when you get such an elevated price, if the volume doesn't show up day in, day out, what's going to happen is that the stock's just going to start declining day in, day out, okay? So when it comes to HTOO, for me, it's one of those tickers that, the catalyst is good. For now, the catalyst is good. Now, let's move on to the what, the stock analysis. Now, when it comes to doing the what, right? The what analysis is a little bit different than what you may anticipate, right? A lot of people think about the what analysis as a company analysis instead of a stock analysis. The stock is on the company and the company is on the stock. It's our job to analyze the stock, not the company, okay? So what are the first things which we look for when it comes to doing stock analysis? The first thing which we look for is going to be anticipating volatility. So when it comes to volatility, guys, this is a ticker which is extremely, extremely volatile with a market cap of under $10 million. Very volatile. We like that, okay? So we're going to go over here and we're going to put volatility as amazing. Now, the next thing which we're going to look at is going to be institutional ownership. So HTTO, if we can pull it up real quick here. There we go. It has a 2.3% institutional ownership, okay? A 2.3 institutional ownership. That's not good, okay? That's not good. Anything sub 1% is terrible, 1 to 10% is bad, 10% to 20% is okay, 20% to 50% is good, 50% plus, amazing. All right. Now, the next thing which we want to look at is going to be the company's finances. Now, you guys may be like, Sam, isn't the company's finances the company analysis? Yes, it is. However, the reason why we're going through the company's numbers are not for us to anticipate their projected growth or their earnings per share or their, P ratio or something like that, which is something that a lot of traders do. And I think that, it's data overload, right? It's data overload. And I think that this is the problem, right? When you don't know what to look for when it comes to doing, doing research, you look at a lot of things. And when you look at a lot of things, you have many different moving pieces that are pointing to buy, sell, buy, sell. So, and this is the problem, right? This is why if you look at my chart, right, my chart looks very clean. Why does my chart only have a couple of indicators on it? Why? Because I understand that if I have 5 different indicators, the odds of all 5 indicators indicating a buy is practically 0. So what happens? I avoid things, right? Like I go, okay, well, these 3 are saying buy, but that 2 is saying sell. I'm going to buy today. The next day, these 2 are saying buy, those 3 are saying sell. I'm going to buy today. So what's the point of me having all these indicators on my chart and messing up my chart and like this is what a lot of you guys' charts look like. and you're like, I found the bottom. What's the point? What is the point of having so many lines if you're going to avoid and ignore 90% of them anyways? What? Because it looks fancy? Because it makes you feel like you're doing something? Let me tell you what doing something looks like. This is what doing something looks like. 500 trades later, I have an 82% win rate. 500 trades later. So, keep it simple. There's a great saying. I love the saying. It goes, fancy scales, it goes fancy fails, simple scales. Okay? So instead of having freaking 500 different EMAs and SMAs and all this other BS and Belenga brands and keep it simple. Keep it simple. Keep it simple. A trader's best friend is a vertical line, a horizontal line. My apologies. Trader's best friend is a vertical line. Horizontal line. I don't know why I keep saying vertical. It's a horizontal line. All right, so you don't need 1,000 different indicators to indicate where the stock's going to go. Now, when it comes to doing stock analysis, going back to the stock analysis, the reason why we look at the company's finances is only to anticipate whether or not the company's going to have dilution or not. Let's look at the company's numbers. Company has negative $6.3 million. This is based off of their most recent SEC filings. The company has negative $6.3 million in the bank. They burn $4.37 million every 3 months. Leaving them with 0 months of cash. They have negative cash, guys. Negative cash. You know what this means? This means if something's free, they can't afford it. Okay? So, finance, I'm going to put it as terrible. Now, the reason why we're looking at their numbers is so we can anticipate whether or not this is a company that's going to rug pull us. This is a company that's going to have dilution or not. In the case of Htoo, right? Historically, they've diluted a lot. Right now, their oversupply is big. They're diluting. I'm not surprised that they're diluting. Okay, so we're gonna put that as terrible as well. Now, next one we're gonna look at is gonna be short interest. We're gonna go to Ortex. We're gonna pull up. Okay, so the past day's been flat. Past 7 days, short interest is down 26%. This is actually bullish. The fact that shorts have been covering their position, this is actually bullish. Okay? Now, let's talk about the chart. Where do I see it going? I see it potentially coming up here and testing this $9 levels again. Okay? Unfortunately, my friends, I don't see it breaking above 1250. Okay? I don't see it getting above this level ever again. Sorry, I don't. Okay? Call me crazy. I do not see it getting above this level. For me, I'll start cutting my losses above 8. Okay? Above 8, I'll start above 850. We'll say above 850, I'll start cutting my losses. And then the closer we get to 10, the more I want to make sure I have no more skin in the game. Okay? That's how I would do it. Right? And remember, losing is part of trading. Losing is part of trading. 80% win rate. That means 20% of the time I lose. Losing, look at this shit. Big ass L on VLCN the other day. Losing is part of trading. Remember that. Okay? So that's my take when it comes to Htoo. Now listen, if you're tired of losing, I got good news for you guys. Right now, you guys can trade with us for 7 days free. We offer a 7-day free trial and a 30 days money back guarantee. We have day trailers, swing alerts, and option alerts. Lessons, one-on-one access, you name it, we got it. Try it out, because right now we still have the 7-day free trial, 30 days money back guarantee. And right now as well, the next 10 members that join, we have a sale where you get 50% access. 50% discount, okay? So, guys, we have over 400 members coming back month after month. Why are they coming back? Because they're making money, right? 400 members, majority of them are paying full price. Right now, you have a chance to join and get access to this for a 50% discount. Try out the 7-day free trial. I would never suggest you guys do something that I wouldn't do myself. I would try this out. I would try the 7-day free trial. Would I stay forever? Fuck, I don't know. I'll see if I make money. If I make money, I'll stay. If I don't make money, I'll be like, screw this, I'm leaving. Right? However, if I'm making money, I'll stick around, but I'll definitely try the 7-day free trial. Anyways, I appreciate you guys. Thank you for watching. Happy Wednesday trading, my friends. Remember, don't give up, don't quit. Why? And I'm scrolling through this so you guys can pause it and maybe read some of these, if you feel like it. But don't give up, don't quit, because 90% of traders are not unprofitable. 90% of traders just quit before they become profitable. Myself, I've been trading for 8 years, 8 long years. The first 3 years were hell. And I'll tell you something about 8 years of experience. Guys, my 8 years of experience is probably equivalent of somebody else's 30 years of experience, because I didn't start trading 8 years ago and say, oh, I started 8 years ago. No, no, no. When I started 8 years ago, the first 3 years, all I did was trade. Then after that, all I did was in the mornings I would trade, in the afternoons I would make freaking 6 videos on trading, and at night I would research for the next morning. So I'm literally living and breathing trading. I didn't open an account 20 years ago and say, oh, I've been trading for 20 years. No, 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 no. This is my life. This is all I do, bro. All I do, ever. Okay? Anyways, thank you for watching. Happy fun trading. Your boy Sam from Top Academy.